Hello, welcome to Channeling Stock. This is Tyrone Fields, and I'm going to be going over, we're going to be getting into technical indicators. This is kind of like a start. We're going to talk a little bit about stochastics, and we're going to channel stock. Okay, you remember when last time we talked about channeling stocks, we were talking about some formations. We got into formations, which is morning stars and evening stars, and the confirmations and how you find all of that stuff. Okay, so now we're gonna go in and get into channeling stocks, and then we're gonna evolve in the next class into technical indicators. Okay, so right outside of this class, right, if you scroll below, you can download this form right here. This is a checklist for channeling stock, and it's important that you have this list. Will help you out very much. Whenever you go and channel stock, you can kind of refer back to this list. And on this list, it's a lot of things that we went over in the previous class. It's just like conditions to be met. You want to make sure that the stock has a daily volume of 300K, okay, which means 300 shares were traded during the trading day. All right, and then also make sure that when you buy the stock, is moving off of the support. And then also make sure that the stock is channeling once or twice a month. Okay, so what I mean by that is make sure that this is support and that's resistance. Make sure that stock is channeling. Make sure it hits support and resistance at least once or twice that month. Okay, or that period. Also, the only thing that we haven't really talked about yet is number 3. Check the stochastics, and I'm going to go into what stochastics are later on in the class. Okay, so as you see, I just read it off though. It says they should be moving up through the 20% line to signal a buy, and I'll show you what that is later on in this class. All right, so channeling stock. Let's go ahead and define that. It's a repeatable pattern that can be identified, which gives you an opportunity to buy or sell. Okay, just like that example that I gave you on the previous slide, that's channeling stock right there. Okay, you have 1, and then it goes up to 3, and then it goes back down to 1, and then it could go up to 4, but it goes back down to 1, and then it hits 3. Okay, it hit 3 multiple times, which is your resistance. Okay, and it hit 1 multiple times, which is your support. That's channeling stock. The inside of here, think of that resistance is the bread, and think of that support as the bread, and writing there is your meat. That's your meat. That's your money maker. Okay, just think of it like that. All right, so the stock moves in 3 ways. As you know, it moves up, down, or sideways. Okay, now up is also known as a bullish trend. So what I mean by that is when the stock is actually moving up, trending up. Okay, this right here I showed you was sideways. Okay, this is trending up right there, and that's trending down. Okay, so this is the bearish trend, that is a bullish trend right there, and that's a sideways trend. Okay, so those are the 3 type of ways that the stock moves. Now a breakout is when the stock breaks out of its resistance. Okay, so I'm gonna do another example over here. Let's go ahead and channel this again. Now remember, this is 1, that's 2, go back down to 1, and then 3, 1, I know it's a little off, and then 4. Okay, alright, so as you can see, it hit 1, and then 2, and then 1, and then this is your resistance. It broke out of resistance. It breaks out of resistance and goes up to 3. And then it hits support again, 1, and then it breaks out, and then it goes on to 4. And now it's considered an uptrend stock. Okay, just like right there. Okay, breakthrough is when the stock actually breaks through support. So it's the complete opposite of resistance. So instead of the stock hitting 1 multiple times, it breaks through and hits 0. Okay, it breaks through, and that's considered it's trending down. All right. So I have a few examples for you. I'm gonna show you some examples, which is right here. And as you can see, this stock is actually trending up. Okay, it's trending up. It started from 47.50 and then it ended up at 57.48. Okay, one thing that I want you to know is stock. They have something called floors. Okay, which sometimes a stock. Remember, I told you previously. Sometimes a stock tends to make another support line or make another resistance line. Okay, so for example, right here, let's go ahead and identify support for December 2012 and January 2013. So as you can see, between that time frame, that stock, say that's our support. It's not perfect, and then this is our resistance. Within that time frame, this stock was bouncing up and down off support multiple times. But then what happened? Okay, it breaks out, right? It breaks out, and this resistance line, that resistance line actually becomes a support now. Now it breaks out and it starts another floor. Okay, so let's just say right here, this is floor 1, this is floor 2. Now it only stays at floor 2 for a short amount of time. Okay, it breaks through support and then it goes right up. Okay, it breaks out again. Okay, as you can see, it starts another floor. Now you can see it hits support and then it hits support again and it breaks out again. Okay, so this is floor 3. So this is your support and that's your resistance. As you can see, it's trending up. It hit resistance, went back down, hit support, and then it breaks out, okay, into another floor. Okay, I hope that you see the pattern. And as you can see in this floor, okay, which is this is 3 and that's 4. In floor 4, you see it hits multiple times. You know, it hits support and then it goes up, hits resistance, back down to support, and then it decides to break out. Okay, I hope you see that. So let's go ahead and go to another one. So as you can see, this stock is also trending up. Okay, as you can see. Okay, now let's identify some floors, and within these floors, that's where your opportunities tend to be. Okay, now when the stock actually breaks out, so for example, this floor right here, you see that's the support, and then you see that's your resistance. Hit support, hit resistance, back down to support, and then it goes back up. Say you put in the order, you know, you put in a limit order right there. Okay, right there. I'm just going to draw a dot. Okay, and that's right around $34. Okay, you put a limit order, and then you put your sell order right around 36 right there. Right around 36. Okay, so you bought right here, right around 34. So let me put it 34. And then you decide you want to sell right around 36. And remember, don't ever go into a trade unless you know where you're going to sell it at. Okay, so sell 36. Okay, so now you're in. Okay, you bought it and you got your sell order. So you have 2 orders in. What order are you missing? Okay, you're missing your stop loss. Okay, let's protect. Remember, we have to protect ourselves. So we bought it at 34. So what can be how much, when you put in stop loss, you have to make sure that you consider how much am I willing to lose? How much am I willing to risk? Okay. So let's just put it in at 33.70. So let's put it in around, let's say right there. Okay, I know I'm off on my alignments and everything, but I hope you get the point. 33.70. Okay, so now we have our order in to buy. We're selling up here at 36, and we're protecting ourselves, which is 33.70. Okay, so now we're good. Now let's say this stock actually trends up. Now we're seeing a profit. Say we're at 35. What you're going to do is you're going to take out this stop loss, which is right there, and convert that into a trailing stop. So now your trailing stop is confirming your gains. Okay, so if that stock decides to drop back down, that trailing stop loss will stop you out, and you will secure your profit. Okay. So whenever this stock actually breaks out, that would be an ideal time to having your trailing stop loss. You don't have to sell. You can put in a trailing stop loss to secure your profit. Okay. And then the stock comes back down, bam, you're out. Okay, you're out. You have your profit. So now it comes back down, and it goes right back up. Now it's creating another floor. Okay, I'm sorry. Let me erase that. Now it's creating another floor. Okay, it's right there. Okay, as you can see, it hits support, resistance, right in there. Okay, that's another opportunity. Alright, and then you will repeat what you did, put in that limit order to buy, and then you protect yourself in your sale. You have those 3 orders in. Okay, here's another example. Now this stock is trending sideways. As you can see, it's not trending up or down, it's trending sideways. Okay, so for this period from August, August 2012, November 2012, the stock was actually trending sideways. So let's go ahead and put our support in and our resistance. It's trending sideways, and as you can see, it breaks out. Right, it breaks out, and this resistance kind of becomes our support. Okay, well, no, actually it doesn't. It breaks out and creates another support, which is right there. It bounced right off of there, and our resistance is right here, and then it breaks out right there and creates another floor. Okay, remember, these are all floors. Floor 1, 2, 3, 4, 5. Okay, these are all floors. As you can see, it hits support up here, floor 5. It hits support, hit resistance, back down to support, resistance. Okay, these breakouts. That's when, like I said, that's when you will secure that profit and convert that stop loss into a trailing stop loss. Okay. Now let's go over Let's go ahead and get in some technical indicators. Let's talk about stochastics. Okay, I tend to mess that word up. Stochastics are averages. Just think of it as averages. Okay, so I'm not going to explain the whole entire calculation of everything, but a few important things I want you to know. What's very important is I want you to recognize this number, that 80 and that 20. Okay, think of this as your support and resistance. Okay, so as you can see, you see 2 lines, right? You see 2 averages, right? And as you can see, when these averages connect right there on that 80, that is a signal. I want you to remember this. That is a signal to sell. Okay? When you see these averages connect at the 20, this pen keeps doing that. At the 20, that is a signal to buy. Okay? Same thing. Here you go. Signal to sell. Okay? And I'm actually going to show you that on the chart. Okay, so we're looking at this stock right here. Now, right here, remember, it hit the 80 and the 2 averages connected. Right? That is a signal to sell. Okay, so let's go ahead and draw that line right there, as you can see. Right there. I know it's sloppy, but as you can see, what is this right here? That's the evening star formed, and boom, it went down. You come down to your stochastics, This is another indicator. Okay, you see these two lines, they connected at the 80 and it trended on down. Here's another example right here. These two lines, they connected close to the 20 right there and it trended on up. Now let's come up to our chart. Okay, let's find a morning star formed right there. Remember, that's morning star formed. You got your bullish, bearish, bullish, confirmation, and it went on up, trended up. Right here, here's your confirmation. Okay, the closer that these two lines get together, you know something is about to happen. Here's another one. You come on up. This is the evening star formed. Remember, we went over that evening star formed. You see your doji right there, and then that's your confirmation, and it trended on down. Let's come down to our stochastics and see, and here's another confirmation right there. So what we're getting into now is with these technical indicators, we're about to formulate as many confirmations as possible. Okay, so we got our evening star right there, and we got a confirmation. Okay, we got another confirmation. So guess what? Something is about to happen. Whenever you see these two averages on your stochastics, when they meet, you know something is about to happen. Alright, remember that. That is one indicator that we're going to go over, one of the many. And then and this would definitely help you with your confirmation. Now, one thing that I want you to remember, and I want you to write this on your channeling stock checklist that you have. If you didn't get a chance to print it out, just write this on a sheet of paper. Right next to number 3 where it says check stochastics, I want you to put in parentheses, make sure you can only use stochastics when you have a sideways trending stock. Okay, when the stock is trending sideways. Okay, so this stock is trending sideways. Okay, remember, it can't trend upward and it can't trend downward. Okay, so going back, this is trending upward. Okay, this is trending upward. This will not be ideal to use stochastics. Now, let me erase this. Okay. So, like I said, it's trending upward. Now, could you use stochastics right around here, this area? Yes, you can. That's trending sideways. So, from January 13th to March 2013, you can use stochastics. Okay? This whole entire chart you can use it because it's trending upward. Okay, same thing right here. You can use stochastics. That's channeling sideways. Okay, so remember that when the stock is actually channeling up, do not use stochastics. You use other things. You can use other things like moving averages and exponential moving averages, which we're gonna go over that next class. Okay, we're gonna go over MACD, moving averages, and we're gonna go over other technical indicators. But just for right now, I'm gonna give you an intro. That's stochastics. I want you to know what that is. So, like I said, on your channeling stock paper, if you haven't printed it out, write it on a sheet of paper. Make sure that you write, in order to utilize stochastics, the stock has to be trending sideways. All right. So we talked about the windows, okay, the different windows that stocks make, and then we talked about stochastics. All right, next class we're going to get more into detail with the technical indicators. So that's all I'm going to talk about in this class. If you have any questions, please post them. Go ahead and communicate with each other. I want you guys to communicate with each other. All right. So until the next class, I will talk to you later. All right.